Hello, everyone. Chase Clark here with Home Prop. Wanted to update you about one thing that's happened this week in the world of real estate. President Trump teased at a press conference on Tuesday that the administration was looking into eliminating capital gains taxes on home sales. And this was later connected to some possible legislation being pushed through Congress related to the same thing from Representative Brian Glenn. The goal there would be to eliminate all capital gains taxes on sales of primary residences. Currently, federal law exempts $250,000 for individuals and $500,000 for married couples from federal taxes on capital gains from primary residence sales. And it's estimated right now that the average home equity in the United States is somewhere between $303,000 and $319,000, which is down slightly from its peak in 2024. So for the average married couple, this particular plan would probably have zero impact at the moment. But for some individuals who aren't married, it could provide some, pleasant tax relief. The bigger question is, and the goal behind these kinds of statements and possible legislation is to try and motivate people to put their homes on the market, increase the supply, and potentially make homes more affordable by lowering the price of homes. Now, most people that have homes now don't want to see this happen. They want to maintain the value of their home and keep prices high. Right now in the Tampa Bay market, we're currently sitting on 5.4 months of inventory, which is considered still to be on the very, very top end of an equilibrium market. Right now, we have inventory numbers that are up 50% since January of 2024. And as we said before, more inventory is going to drive the price down because we're going to have increased supply. And right now, we do not have elevated demand. Critics of this kind of thing point to the fact that these kinds of policies and legislation will benefit only wealthy homeowners and investors who speculate on real estate purchases. Year to date, in Florida, 27% of home purchases have been made by investors. And affordability in the future is likely not to come from tax policy, but more from a reduction in the cost of ownership. Things like lower interest rates, lower property taxes, and lower insurance costs, especially here in the state of Florida. Right now, here in Florida, we are the most expensive state in the union in which to insure a home. And as 30-year fixed interest rates continue to hover just below 7%, which is really unchanged since January, despite the Fed dropping rates once already this year, the cost of ownership remains a little higher than most people are comfortable with. Most Floridians, instead of a tax policy change, are probably going to prefer lower property taxes and lower insurance costs. Insurance costs have come down slightly this year. We've had more carriers enter the market here in Florida. And despite this, the governor has tried, at the dismay of the legislature, it seems, to eliminate or even significantly reduce the property tax burden on homeowners, but to no avail. The legislature punted this issue into the next session. Hopefully, we will see a reduction in the cost of ownership for homeowners here in Florida coming in the form of lower insurance premiums or reduced property taxes in the next 12 to 18 months. But until then, we're at the top of an equilibrium market. We've got more homes available for sale than ever. And I don't think that any kind of a change in the tax policy is really going to move the needle on that.